Hello, everyone. This is Dan Gramza, and welcome to dangramza.com Market Studies for Monday, November 3rd. Interesting finish up to the week. If you haven't seen these charts before, it's a candle chart, daily chart, swing trade is the concept. Solid green line, that's a buy level. Solid red line is a sell level. If it's a dashed line, it happens earlier in the week. Now, let's talk about what's happening here. For example, the buy level here to that sell level, the red line, just to give you a reference, is $7,100 a contract. And the difference between this sell level and that buy level is $350 a contract. But I want to point out something to you, and that is if we were a buyer here, it failed as it broke to the downside. So on Friday, if we held that position, it would be losing money going into the weekend. That's why any trade that you put on, you always want to manage the risk. What is acceptable, what's required by the technique, and what's acceptable to your account and your own comfort. So those three, the price is really the dictation of what needs to be done. And if it doesn't feel right or it's too much risk, you shouldn't do the trade. So what do we look for on Monday? Looking for an inside day on Monday. Check out the NASDAQ market. Very similar to what we're talking about. It's also a neutral zone trade. A dollar difference here in that market is $15,240 a contract. Again, inside day on Monday. And when we look at what's going on with the Dow, a dollar difference, the sell to buy level or buy to sell level in that market is $3,285 a contract. They're selling the rallies, buying the breaks. It implies a sideways move with a bullish bias. Ooh, look what's happening here in the Russell, the small to mid cap stocks. This Friday close implies profit taking or a market that's gotten cheap, profit taking from sellers or a market that's gotten cheap enough to find buyers. I think it may be the latter, and I'm looking for an up day on Monday in this market. So very interesting structure. In the euro, here we're seeing a market that has stayed on the short side. Sellers have been in control, which means the dollar has been in control in that market. Dollar difference, the buy to sell level here is $262.50. Well, when we look at what's happening with the Swissy, also a market where sellers are in control, dollar difference buy to sell is $712.50. And again, I want to point out, this traded just a couple ticks above that buy level. You really can't tell it here, but it failed on the buy side as it broke to the downside. So again, risk management critical for any trade that you put on. In Mr. Yen, it also broke on Thursday, a rest day on Friday. That is the right kind of rhythm that we expect to see. Dollar difference sell to buy level, $125 a contract. Look for a sideways move in that market. Aussie dollar also is one that has set itself up for a possible rally. Be careful here if you're on the short side. Dollar difference buy to sell level, $440 a contract. Now, the British pound, it's getting lost momentum, finding buyers at lower prices. Be careful here if you're on the short side. It's setting itself up for a rally. Canadian dollar sellers are still in control, but it's also at levels that buyers have entered before. So be cautious on the short side in that market. So question is, will the dollar stay dominant this coming week? Monday and Tuesday will give us clues about that action. Bitcoin, this traded above its buy level. Dollar difference, sell to buy level in that market is $4,450 a contract. Dollar difference that sell, this buy to that sell level is $17,125 a contract. And what I told you before, this difference, sell to buy level, is 24,725. Look for an inside to higher movement on Monday. This implies a level that we've seen buyers before. Let's take a look at what's happening here in the bond market. It's slowing down. Look for a sideways move. I like the action that we're seeing there. Well, how about gold? Here's a market that's also trying to figure out what to do. The sell to buy level here is $2,200 a contract. I don't expect strong follow through. Again, sideways move here. This is setting up the possibility of that neutral zone trade. And the same thing holds true with silver. It implies profit taking and another leg to the downside. So I'm looking for downward movement in that market. Dollar difference sell to buy level is $3,800 a contract. Check out copper. It's backing off a bit. Dollar difference buy to sell level here is uh, there it is, $3,500 a contract. And what are we looking for? Well, this implies a market that's getting low enough to find buyers. So on the short side, be cautious because Monday could be an up day. And when it comes to crude oil, we got a lot of crude oil. And this is bullish. It implies an update on Monday. We also have an OPEC meeting. So again, do we have fundamentals to really drive this market? I don't think we do. But the fact is, prices here and buyers are pushing it higher. Dollar difference, that green line to this red line, is 3,000 $440 a contract. Nat gas, we have a lot of it. It's continuing higher, and we expect further movement to the upside on Monday. Soybeans, part of the deal that was cut with China, but will they get the job done? There's some doubt about China following through in this market. Dollar difference buy to sell level there, $1,700 a contract. Right now, buyers are in control. Now, corn and wheat were not included in that trade deal. Corn, on the other hand, is bouncy. We are finding some buyers coming into that market, a good sign for a continuation to the upside. Dollar difference buy to sell level, $1,700 a contract. In the wheat market, dollar difference buy to sell level here is $1,450 a contract. Follow through, it's also expected, but to the upside. But be careful here because this is where we've seen sellers hit this market before. So be cautious on the long side. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again. And as always, take care.